Hello, welcome back to Learn Economia. Here we have already given you some understanding related to the different investment strategies available in the financial market. So having said so, I think you might have gone through the video and you might have made your mind that whether you are fit for making investment right now or whether you should postpone your idea of making investment. So anyway, we are going to what is known as the pros and cons of different investment strategies. Having looked at the different investment strategies like the value-based strategy, the growth-based strategy, all these kinds of things, we are going to see the different pros and cons available with respect to all these kinds of strategies. So let's go to the video and then make your decisions to pick which one of the strategies. So coming to the first thing, that is a value investing, I have already discussed the value investing in detail in the previous video. So I'll be providing the link of the same in the link of the video which discuss the different kinds of investment strategies in the description box, so that you for people who have not watched watched that particular video, they can go to that video first and then come back to this video to have a detailed understanding with respect to different investment strategies available in our financial market. Okay, first is a value investing. Here, coming to the pros, we can see that there is a long-term opportunity for gains, and when it comes to gains, we have to we have to give importance to large gains, and value investing is something which give importance to large gains, and as a result, here there's a large chance, a large opportunity, and a long-term opportunity to make large gains. This is because the market fully realizes a value company's true intrinsic value. And also, if you are a value investor, chances are very high that value companies often get stronger risk or reward relationship. You know that the risk is something which move in positive association with return. If you have high risk, definitely you will be getting high return, but if you take low risk, your return would also be low. So that's the thing, and here we can see that there is a strong risk reward relationship with respect to value investing, and your value investing is something which can be rooted in fundamental analysis and often supported by financial metrics. So you can collect data from the company, the past record of the data of the company on which you are planning to invest, and you can analyze the data and see whether the company or whether the company that you are planning to invest in is the apt one for you to make investment. And also, value companies are more likely to issue dividends as they aren't as reliant on cash for growth. So we have seen in the previous video that there are some kinds of investment strategies where you won't be getting what is known as dividend, but in the case of value investing, it is for sure that you will be getting dividend. So here it is for sure to get dividend. So as a result of these kinds of things, we can see that value investing is something which is a good option. But this investment strategy is not free from criticism. It too has got certain disadvantages. And what are these? Value companies are often hard to find, especially considering how earnings can be inflated due to accounting practices. And we can also see that successful value investment would take time, and you have to collect a lot of data. You must be waiting for the right turn. You must be actually the investor must be really patient if you are going for value investment. And also, even after holding a long term, there is no guarantee of success. As I've already told you, if you are investing in the share market, there is a 50-50 chance of making success and failure. Either you will be winning or there is equal chance for you to lose. So you have to take this reality into your mind, then only you can come to the market and make investment. So this is something which is an assurance. Nobody can predict whether you are going to win or whether you are going to lose, but definitely if you are analyzing market data, you will be getting an idea with respect to win or lose kind of situation. But we cannot predict anything when it comes to a financial crisis. All these kinds of things can happen all of a sudden, and some company might gain, some company might lose after as an after effect of all these kinds of things. So I'm not going into the depth of that. Coming to the, another disadvantage of value investing, you can see that investing only in sectors that are underperforming decrease your portfolio diversification, and you might be knowing that if you are diversifying your portfolio, it is actually a better way to deal with your risk. If you are actually losing in one company with respect to one company share, you might be gaining with respect to some other companies share. So you can actually find a balance if you are diversifying your portfolio. But here there is a lesser chance for diversification of portfolio. As a result, you can have a good chance of losing. So be alert with respect to this cons with respect to what is known as the value investing. So having said a lot about value investing, now come to the second kind of investing, that is growth investing. Coming to the advantages here, we can see that the growth stocks as well as funds aim for short-term capital appreciation. So if you make profit here, it will be usually quicker than compared to value stocks. So here it is, in short term you can make a lot of gains. Chances are very much high with respect to growth investing if you are going for short term gains. And once growth companies begin to grow, they often experience the sharpest as well as the greatest stock price increases. So another important advantage here, that is the case, and that means that once it starts growing, there's a tendency for these companies to grow on and on. It can continue its growing path, continue on its growing path. Also, you can see that growth investing does not rely as heavily on technical analysis. So just take the data related to the performance of the companies and you can analyze it. Technical analysis is not that much needed, so you can easily interpret the results, you can easily begin to make your decision, so you can easily make your investment. So growth companies can often be boosted by momentum. Once growth begins, future periods of continued growth would be there, and this is something which is considered to be more likely, and these are considered to be the advantages of what is known as a growth investing strategy. Coming to the disadvantages, as I have already told you, everything will be having two sides. Every coin would be having two sides, and as a result here, growth investing is not free from this. Here also we can see that there are disadvantages. Growth stocks are very much volatile. That means that there are a lot of fluctuations. It may fluctuate and fluctuate. Good times are good, but bad times are bad. That's it. So in good times your company would grow, your share price would grow, but in bad times your share price would be very less, and this too can continue, right? So when good times can continue, there's an equal chance for bad times to continue as well, right? So depending on macroeconomic conditions, growth stocks might be long-term holds. For example, you can see that the increasing interest rate works against growth companies, and also we can see that growth companies rely on capital for expansion. So we cannot we cannot make sure that every time you will be getting dividends. In some cases you might not be getting dividends, and for shareholders dividends are actually a source of revenue. But if you are not getting dividend, then what will happen? You are actually you might not be having any source of revenue if you have invested all your funds on the share market or bond market or whatever it may be in the financial market, right? So growth companies, we can see that also another criticism here is that these companies often trade at high multiple of earnings. So entry to growth stocks might be higher than entry to other kinds of stocks or other kinds of investment strategies. So just what I'm telling is that before deciding which strategy to adopt, it is better to analyze each and every strategy very carefully, and also view your financial condition. Just try to see that which is the apt investment strategy that matches your financial situation. So this is very much important before going for investment. So this why I'm telling this again and again is because this is something that plays a very important role in your life. You might be investing all your money in one share or one stock or one company, and one fine morning everything would crash and you might be nothing, you might own nothing. So I don't want such a situation to come to your life. That is why I'm telling this again and again. Always it is better to diversify your portfolio and be with the same. That's it. And having discussed the value based investment and also the growth based investment, now let's come to the pros and cons of momentum trading. Here the advantages are higher risk means higher reward. That is something which we have already discussed, the positive association between risk and reward, and there's a greater potential for short term gains in momentum trading. Also, momentum trading is done in short term and there is no need to tie up capital for a long periods of time. So expectation to get short term gains can be very much higher with respect to momentum trading. Also, this style of trading can be considered as a simpler way of getting into the share market. This trading is often considered to be an exciting style of trading. So with quick price action changes, it is a much more engaging style rather than strategies which require long-term holding. So short-term kind of trading is something which is very much common with respect to momentum trading. Here also you have a lot of disadvantages, like this requires a high skill of properly gauging the entry and exit point. You have to understand where to enter and where to exit. So to what extent you shall wait. So this why I'm telling is because when the when your share price, the price of the share that you own, when it is increasing, you might be waiting out of the expectation that it would increase and increase forever. But don't wait till that. You might exit at a particular point and you should know that point where to exit. And with the case of entry as well, if the share price is falling, you might think that I will wait till the price of the share comes to zero. I will wait, or till the price of the share when it comes to very less, or I'll wait to purchase the share. Don't wait till that, because you cannot know how to analyze a stock market situation when there is some kind of financial crisis or some kind of things. So just see when the market is normal, just try to understand the market, just try to understand the performance of the company in which you are investing for, and also see how to exit and how to enter and where to enter and where to exit. All these kinds of things are very important, and here there is something which needs a lot of skill: analyzing and understanding the market, and analyzing and understanding the performance of your company. Everything is very much essential. That means that a good knowledge is very much important if you're going for momentum trading, and that is considered to be a kind of disadvantage, because not everyone who enter the share market has got all these kinds of things, right? So again, we can see that the momentum trading, it relies on market volatility. A lot of fluctuation would be there without prices quickly rising or dropping. There may be many trading would be happening, many people would be gaining, many people would be losing. So we cannot make any kind of predictions related to that. And depending on your investment vehicles, there is increases for short-term capital gains as well. It all depends upon your investment vehicle. And finally, we can see that invalidation can happen very quickly, and this can happen even without any notice. An entry or exit point might be longer exit, or it can be a lost opportunity if you have not entered, or if you have not made your exit at the right time, at the right point, then that would be a lost opportunity. So be very patient, and also be very patient with respect to understanding the performance of your company. Just look into the past performance and see how the market is going, and make the decisions with respect to entry and exit very wisely, very clearly. Coming to DCA, we can see that here the pros are, this is something which is combined with other strategies which we have already mentioned. And if the prices are declining, your average cost basis would decrease, and this would increase your potential future gains. And also see that apart from other, if you're comparing DCA with other kinds of investment strategies, this is something which removes the emotional element of investing. That means that this is something which requires reoccurring investment regardless of how markets are performing. Once you have set up, DCA can be incredibly passive and require minimal maintenance as well. Coming to the disadvantages of DCA, you can see that it is something which is difficult to automate. Especially this can happen if you are not familiar with the broker's platform. So if you are not a person who has got much understanding with respect to financial market, then it is better that you book a broker's time. A broker's time as well as energy is very much important if you are not that familiar with respect to your financial market interaction. Then during periods of declining prices, your average cost basis will decrease. This would increase your future tax liability, that a large part of your profit might be taxed. That is another disadvantage. Also, you might have steady stable cash flow to invest to DCA. So you must make it sure that you have the amount with you. This is another criticism. And also you can see that investors might be tempted to not monitor DCA strategies. However, investments, even once automated, should be reviewed periodically. I hope you might have understood both the pros and cons of all the 4 investment strategies that I have discussed. So that's all for today. Please like, share, and subscribe to this channel for more videos, and you can be a part of my Telegram channel and Telegram group to discuss your doubts. I'll be giving the links of these in the description box. You can join from there. My humble request to you is that don't put your entire money into a particular company share. So that will give you a lot of danger. So that is my humble request to you. So please take that request. Please consider that, and you can be a part of my Telegram channel and Telegram group. That's all for today. We can join together with another video. Till then, bye.